Hello and welcome to Economic Lifelines Nigeria. I'm Esther Ubodaga. The growth and development of micro, small and medium-sized enterprises is a vibrant narrative in Nigeria. Africa's largest economy is counting on the over 17 million small businesses across the country to help drive sustainable economic growth. In this episode, we focus on Nigeria's SMEs and how the latest funding boost from the federal government could change the growth prospects for this sector. According to the United Nations Industrial Development Organization, small and medium enterprises account for 90% of enterprises in the world and are responsible for up to 60% of employment. In Nigeria, however, the sector remains underdeveloped, and employment in SMEs accounts for less than 20% of the population.
10 years ago, we thought by now SME would have grown to an extent that they export at least 60% of Nigerian non-agricultural exports. But we have not been able to achieve this. And why? We look at the infrastructure, we look at the SME organization themselves. How are they structured? Because when you have problem, it's the SME association that should present this to government, and for government to correct or institute policies that will suit the SME and that will lead to the growth of SME. But over the years, you find out that those who are leaders in these associations don't even have industries, and they don't know how it affects individual SME organizations.
If you look at the key sectors that contribute significantly to GDP, they are populated basically by the SMEs, not the big companies. You find the fairly big ones maybe in the financial services or the banking sector, the multinationals and some few conglomerates. So over the years, I think they have been playing very big role, and they have been growing really, both in terms of the numbers and the value that they are bringing to the economy.
There has been a lot of transformation that has taken place in the SME sector by government. There has been a lot of schemes. Of course, at some point, of course, banks were expected to set aside, a portion of their profit, profit after tax to support the SMEs. There has also been the issue on special schemes that have been put in place to support the SME. But recently, of course, there has been a concerted effort to support that more than ever.
The bulk of Nigeria's SMEs are in the micro category, and their expected success rate is low, as many of them fail within the first 5 years of operation.
There are factors that are internal to the business. There are factors that are external. When you look at factors that we can call endogenous factors, it has to do sometimes with the management capacity of the SMEs, understanding the skills of managing business. You also look at the issue of personnel. Well, quite a number of them complain about the issue of work ethics among their staff, issue of skills among their staff. They have a lot of issues operationally. But there are also factors that are external. For instance, for those of them that are in production, the productivity issues of infrastructure, has a way of, blowing their costs beyond what can make them survive. Especially when you are dealing in an economy that is experiencing a lot of influx of finished goods, especially from Asia. So their capacity to compete at the level of production is very weak.
When you develop a product, the multinational will come and invest in it and take it from you. So if the African government, if Nigerian government wants its SME to develop, there should be a line drawn below which multinational cannot come, below which foreign investors should stay away. It was done to us in Ghana. Nigerians were not allowed to do some businesses in Ghana, just like any foreigner cannot enter Ghana and just do any business. If this one can be done to us in Ghana, what prevents Nigerian government from protecting its own SME so that job can be created, so that we can also develop our economy at our own pace?
It's global, but it's worse maybe in some continents than others, maybe in Africa. The point is always that there are people that are not prepared before they go into a business, okay? And the fundamentals of business are, so it has some principles you must abide by. So there are first principles of business. So for you to enter into any business, you must establish that there's a need out there in the market that you are coming to meet. There's a gap that you are coming to fill. So if you don't go out and do that market assessment, that need assessment, and you start off a business simply because you see your neighbor or a friend or a family member succeed in it, then you are running a big, big risk. So I think it's that risk assessment and measurement that is the bane of most of these small businesses.
Various schemes targeted at supporting this sector over the years have proved inadequate. For those who turned to the alternative securities market created by the Nigerian Stock Exchange for SMEs, that too has been inadequate.
Well, we have had a series of intervention. We have the SMEs scheme, which was a small and medium enterprises equity investment scheme. At that time, the policy of the CBN was that all banks would set aside 5% or is it 10% of their profits after tax, to support SM, but by way of equity. Because at that time it was felt that maybe debt financing was not helping. So it was decided that the option of equity should be explored. But again, it didn't quite work. But most of the SMEs were averse to anybody coming into, they see it as an intrusive policy. That's something that we allow some external factors, external people to meddle in their business.
The ASM is meant to provide liquidity and capital raising medium through the public markets for small businesses. It's a good idea. It's a great idea. But, it comes down to what are small businesses, and are small businesses themselves comfortable with going on the public markets if there's no true benefit for them? Like as a small business, why would I give up let's even say 20% of my company or 15% of my company for 100 million or 50 million? And do I even have the right framework in place? Do I have a business plan? Do I have a strategy document? Do I know where I'm going? And most small businesses just don't see the point.
Most interventions are actually market distorted. So they distort the market because there are some sort of subsidies, okay? So when you come out and say, okay, I'm going to intervene in the market, so I'm going to provide some funds for you people to use. However, to avoid moral hazard, I'm still going to make sure that the current standards or criteria you use for, say, credit or loan assessment, you're still going to apply it, simply because I want to make sure that you do it properly. What these institutions will say is simply that there's no difference between this and what we'll be doing before, because you intervene to stimulate the market. So what is going to stimulate me if I'm in a financial institution when I'm going to bear 100% of the risk?
The availability of credit, one of the major challenges facing SMEs, was usually the major focus of many government-sponsored intervention schemes in the past. And while lack of financing remains a major hurdle, many more are tripping up would-be entrepreneurs. Experts say small business owners frequently lack the necessary skills needed to turn the money into profit in a manner that was sustainable. The absence of these much-needed skills is one of the reasons banks are usually wary of lending to SME founders.
Many of them have had terrible experience with the conventional banks because they have issues meeting their requirements, because the conventional banks are more rigorous in their risk assessment of candidates that are, investors that are requesting for credit. They are more rigorous. And therefore, the capacity for SMEs, to pass the test, as it were, at the level of the banks are much more difficult.
You have loads of people who are not educated, people who don't even know what the policies are, and people who just start business because they think they can do something. I mean, I'm talking about my brothers in Newi who do spare parts, and they import. They really don't understand what their cost is. They don't put a lot of things, factor in a lot of issues when they do their business. So you find out a lot of businesses start and then die off.
The reason banks don't lend to SMEs, largely most banks, is not that they don't have the capital to lend. It is because they view that sector to be risky. So when you intervene and provide funds for banks to unlend, it's just one part of the story, because the banks have not complained that they don't have enough capital to lend. The issue really is that it's the risk. So until you find a way to de-risk that sector, a way for banks to be covered for that risk they take, then you may find that banks will see these intervention funds. Most of them will not access it.
Running a business in Africa's largest economy is tough. Apart from the high cost of credit, basic infrastructure such as power and good roads is still a challenge. For some business owners, competing with bigger companies can also be a problem.
We still have the same problems of policy, of infrastructure, of funding. And the last one is unemployable employees. So those are the major problems we have.
We had a lot of problem with electricity at the rate of paying $195,000 per month as fixed charge, one. And again, the meter reading were not done. And it's like bringing estimated bill every month, up to a point that we said, please, we don't want this light again. Because what we were being billed was more than if we had used diesel to power generator.
Nigeria has an ambitious plan to be among the world's top 20 economies by the year 2020. The federal government has created a master plan to achieve this. The authorities acknowledge that empowering micro, small and medium enterprises is one of the fastest ways to achieve this status. In August this year, the Nigerian government approved for disbursement a 220 billion naira fund to small business owners. To ensure the success of the scheme, a National Council on Micro, Small and Medium Enterprises will also be established.
This 220 billion CBN MSME fund is very unique. For the first time, it has an all stakeholders participation. First is to say that you have, the microfinance institutions, microfinance bank, NGOs that are focused on financial services. You also have financial cooperatives. You also have what we call the state. But the state will do that through their SPV, special purpose vehicle, which means they need to set up business that will also, use this together. Then, of course, the deposit money banks, which, of course, places like Fidelity belong. Now, for the micro component, the microfinance banks are the ones that would, drive this fund. And, of course, an individual can access for the micro end up to 500,000, as a limit. It's basically, but as you then grow, when you get to the deposit money bank, they can access up to 50 million.
The issue of gender disparity is more defined in this one. What is gender disparity? So you find that access to financial services by women is a lot, how do I put it, in short supply. So you find that most of those that are financially excluded are the women. So financial services will include credit, access to credit, so to speak. I think he has also tried to address the issue of startups. So I'll define the components of the intervention. So there's 220 billion, okay? And then out of this 220 billion, it says 90% of it will go as wholesale funding. And then this wholesale funding is also divided into, say, 50% for micro enterprises and then 50% for small and medium enterprises. Now, inside that, 10% of that 90% should actually go to startups. Now, this is the first time there's a direct dealing with, say, these funds must go to startups. Something that is also very different is economically active persons, but with physical disabilities, of course, excluding mental illness. So those that are physically challenged also are taken care of under this, because 2% of that 90% also should go to those that are, shall we say, disabled physically, but not mentally challenged, but are economically active.
The risk of default by an SME remains a major concern for most financial institutions. Under this new scheme, participating financial institutions will be protected by a national collateral registry, which will be established by the Central Bank of Nigeria.
The kind of credit that most of these micro and small businesses need are things that the mobile collateral assets can cover, like vehicles, like some assets within household items and things like that. Because many of them don't need more than maybe 500,000, $1 million, 2 million, which could really make a lot of impact on their business. In fact, some of them just 100,000.
When the MSME fund was announced a few years ago, there were concerns about the interest rates attached to loans that will be given to small business owners. SMEs will now have access to single-digit loans.
You know, it has a total interest cost of 9%. CBN, you know, takes 3%. You know, the deposit money bank or the financing institution would take 6%. So there's no other cost that is added there. So it's a single-digit interest rate.
Although this new initiative seeks to address a host of challenges that stifle the growth of small businesses, analysts say the government will have to show greater commitment in order for this scheme to succeed. 60% of the MSME fund has been set aside for women entrepreneurs. When we come back after the break, we'll find out how this strategy is expected to boost the sector. Welcome back to Economic Lifelines Nigeria. We're now continuing our focus on the growth and development of Nigerian SMEs with a focus on the role of women entrepreneurs. According to the World Bank, women make up 40% of the world's workforce. Many of the sectors that are critical for economic growth in some of the poorest countries rely heavily on women. In Nigeria, small and medium-scale enterprises with female ownership represent around a third of all SMEs. These businesses are said to have unmet financial needs between $260 billion and $320 billion a year across the globe. The Nigerian government believes women entrepreneurs will be pivotal to the growth and development of the economy and has decided to allocate 60% of the MSME fund to women-owned enterprises.
It's a good idea if it works, because the women do need it more than the men, if you ask me. The men know how to get around, they know how to get access to the funds, but the women need a lot of help. Most women don't even bother accessing finance for their business. They always get money from the people they know. Majority of women. Of course, they say it's because women don't like taking risks. Yes, that's true, but also it's because of the difficulty in getting access to the fund.
Yes, we're women, and so sometimes people don't even take you seriously, like, they don't consider women like important when they want to take decisions on policies. I mean, the president comes in and has a whole lot of consideration for women in his cabinet, in the governance and all of that, and that's quite encouraging. But, my experience coming up, I really didn't want to see that. I decided not to see gender. I wanted to do what I had to do. And when you prove yourself, people look beyond your gender. They see your achievements. So it comes to a point, past a point where people don't look at your gender anymore when you've made your point and you are doing what you have to do, and people start to see your achievements and deal with you on that basis.
In my 7 years of running this business, I work with a lot of small businesses. 99% of my clients are women. I run a business structuring consultancy company. What we do is we help businesses develop structures that will help them grow. I don't think in my 8 years or 7 years of running this business, I've had up to 2 male clients. 99% are women, simply because the women will come when they need help. When they see something that they haven't done before, or they feel that they're struggling, they will reach out and ask for help. And the men don't do that. Men just push on.
Women are different in the sense that when they earn money, they recycle back into their homes, into their communities, into their families. So that in turn contributes towards the society and the economy and their communities growing. So they can be a proper game changer if they have the right structures in place to help them get there.
While the government has been applauded for its decision to give a bigger chunk of the fund to women entrepreneurs, some analysts say many of these women may not qualify for the fund.
The central bank's definition of a woman-owned entrepreneur or business is where the woman has 75% of the shares in the company. Now that's a challenge, because if a woman does not have 75%, then it does not qualify as a woman-owned business. Now you find that in Nigeria, even if a woman is going to register a company, if that woman is married, chances are high, for cultural reasons, that the greater percentage of the shares she will allocate to the husband, most times. You may actually find that it's the husband that went to register that business in the first place. And then the woman will hold a smaller percentage with the children, then the man has 70. That's what you see. But you actually find that the person running the business is a woman, so to speak. So if you restrict it just to say what you find at Corporate Affairs Commission when you do a search, and then you find that the woman owns 75%, then you find that most women will be disenfranchised. But something I need to point out also is that when a woman approaches a bank for a facility, the way she's going to be assessed under this intervention will not be different from the way the man is assessed. The only thing that he's saying is that, okay, for you to maintain that ratio, central bank has brought out, which is 60-40. So even if more men come, you say, no, we'll focus on the women. But when it comes to credit assessment, your business is going to be assessed the same way the man's business is assessed.
Nevertheless, women entrepreneurs consider it a welcome development.
When I heard about the loan, I said, oh, great. People can do something. The businesses can grow. Because essentially it's about growth. It's not that you get the money. And that's why there are a lot of bad loans. Because the interest is so high and it's short term. So you really can't do anything with that fund. And it's not beneficial. So at the end of the day, the business goes bankrupt. It makes more sense. And it's long term, I understand it's 10 years. So it would help businesses.
A woman, if you give her that money, she would use it to develop either her kids, to use it for her kids. And so that business is very important to her because she knows that she's going to do something with it. She's going to train her kids. She's going to train her family members. And so in doing that, she's also creating more avenues for other people to grow and develop themselves. So if you do that with a woman, sure, definitely, that's what's going to happen.
In the meantime, participating deposit money banks have been mandated by the central bank to obtain biometric information of borrowers through an existing database. This will ensure that funds are accessed by genuine small business owners and also prevent multiple accesses. Beyond solving the problem of access to credit and enterprise skills, the success of this scheme will to a large extent depend on the business environment in which SMEs operate.
Empowering SMEs is not just about finance. Finance is just a small component of the issue of empowerment. The more fundamental empowerment has to do with creating an enabling environment in such a way that SMEs on their own will be able to build sustainable businesses that will make it easy for them to access funds, even without support. The issue now is that even if you provide the funds and the environment is still hostile, the capacity for them to repay will be at risk. That is what has happened with many of the intervention funds. Take the textile, for instance. A lot of, some billions of naira was pumped into supporting the textile industries. Where are they today? Some of them are already under receivership because they could not service the loan. So funding is one thing, but the more fundamental thing is to create an enabling environment that will make these enterprises more productive and more competitive and therefore more sustainable. That is very key. If you have a situation where they don't have power, they don't have the logistics, they don't have the technology, finance cannot solve all those problems. So it has to be a holistic approach.
Despite these challenges that the Nigerian government must also overcome to complement current efforts to support its MSME sector, optimism is high that unlike other schemes in the past, this one will make a difference.
We are going to see more than 1,000% growth in terms of new entrants and both those that will cross what you have just mentioned as the 5-year, kind of. So you see a lot of SMEs those moving from the micro end migrating to small businesses, and those from the small businesses becoming also the bigger conglomerates. I see a lot of medium-sized companies that we call in this area now developing the right kind of structure and framework because of what is the kind of partnership that is taking place.
The stakes are high for the Nigerian government as it makes another major attempt to rejuvenate its MSME sector, which it hopes will create more jobs and help it achieve inclusive economic growth. The International Monetary Fund forecasts a growth of up to 6% for sub-Saharan Africa in 2014. According to the international lender, this growth, coupled with more than 1 billion consumers on the continent who spend $600 billion annually, provides SMEs with boundless opportunities. But harnessing that opportunity remains the greatest challenge. Well, that's a wrap on this episode of Economic Lifelines Nigeria. Remember, you can catch this and past episodes of the program on our website. That's www.cnbcafrica.com. I'm Esther Ubodaga. Bye for now.